Yo, what's going on, fam? It's your boy, Anthony Neal. Welcome back to the show. Man, listen, we are having just a real good, quick conversation with the People CPA, my CPA, and she's just dropping some knowledge on what should you be doing right now to prepare to file your taxes, and not just file your taxes for today, but I love her strategy, and it's a strategy that I teach. How do we prepare ourselves to pay less in taxes so we can keep the most of our money, and towards the end of the year or towards this time next year, how do we pay the IRS little to nothing? How do we get close to even to where we can enjoy our money? Because I'm tired of paying the IRS money and then they don't give me no interest back. But then the moment you keep money from them, it's not just interest, it's also penalties.
Exactly.
You know, so I wish I could charge some penalties, interest, issues, law fee. I want to charge them
Everything, agony.
Everything, you know what I'm saying? But real quick, before we get back to the People CPA, real quick, don't forget, right now, a lot of you all are going to be getting a lot of money to come back from your returns. And that's cool. That's great. I want to encourage you to build your emergency fund. I want to tell you where to park your emergency fund. And that's what my friends over at Prize Pool. They're going to give you 0.30% on an interest rate. It's going to be FDIC insured. And then also, if you just park your money in the account, they're going to give you a ticket. So let's say if you have $1,000 in there, they're going to give you 1,000 tickets to go towards weekly and monthly grand prizes. So not only are you going to get a higher interest rate, because the average bank is giving you like 0.05, they're going to give you 0.30. And plus, they're going to also give you an opportunity to win an extra $100 up to about $25,000, depending on what their grand prize is. I've already won about $300. I parked my money over there. Come join me over at Prize Pool. The information is in the show description. When you get your money back this year, save a little of it, okay? Invest a little bit of it. And then also, stop trying to, this is what I do hate. People say, well, I do that with my taxes because that's my savings account.
But as you just said, you don't get no interest. So what is it? If that's the case, you could have just put your money under your pillow.
Because they're like out of sight, out of mind. What?
Right. And outside of not getting interest, remember, you also lost even more because of inflation.
Oh my God.
Right. So that opportunity cost, though it doesn't seem like a lot, it can be substantially a lot. Because imagine taking that $6,000 you got for a refund, but instead of getting a refund, you actually contribute to a Roth IRA, all last year for that $6,000 to where you broke even.
Yeah.
At the end of the year, that Roth IRA will probably hopefully be worth more than that $6,000, right?
Teaching good.
And in 15, 20 years, it's probably going to be worth $100,000.
Right.
So you want to be able to understand that opportunity cost is a real thing. And though you get the money back, it's the fact that you actually are getting a little bit less because inflation, right?
Come on. Mm-hmm. Listen. Okay, listen. I'm going to drop Ramsey's smart tax information below, VITA information below. I'm also going to drop her information below because if you are self-employed and you're going through all those forms, you do need some help, and she's a great person. She does all of my stuff. And I'm telling you right now, I got to cut a check back. I'll just be honest to the IRS. I'm going to pay them on due date. On due date. Okay. And they're not going to get the money before. They will get it on the day of. It'll be posted on the day of due date. For the self-employed people, one of the things that I've really been strategically asking you is, how do I know how much to write off without hurting myself from potentially having to show income? So that way, when I purchase my new home, it didn't hurt me. Like, what's a good gauge?
Right. And that's the thing, because you mentioned earlier that unlike, most relationships, we don't just meet once a year. Right. I'm in your business all year.
Right.
I need to know what's going on so I can better serve you, better direct you, better advise you. And this is another piece of that, right? So understanding that come tax season, we should be prepared. Yeah. We should know how much we're on track to pay so that when the time gets here, we already know what's up.
Surprise.
We know what's up. So for self-employed individuals, they definitely need that assistance.
Yeah.
You don't want to be a self-employed individual and you get to January 1st of the new year and you did not learn, or more importantly, you did not execute any tax strategy.
Yes.
Right? Because now you're putting yourself in a very tight position. After the cutoff date, which is 12/31, or whatever your year end is, if you change to elect a different year end, that's your cutoff date,
right,
for the most part. So all of our many deductions that we can take, we're now limited to just a few, because we're now in a new year. We're in a new tax year. Right. So we want to be proactive in tax plan.
Yeah.
For individuals that have businesses, know that there's no cap on what you can deduct. Right.
Yeah.
So if you want to take it to the extreme, you can. You can go ahead and deduct pretty much almost anything. In our first episode, we talked about how to deduct an expense. All it needs to qualify is being ordinary and necessary, meaning that it's ordinary in your course of business, right? I'm an accountant, so buying software, buying laptops, that's ordinary. Necessary, meaning that I needed that to make money. Again, my laptop, my software, I needs that, right? I need that. That makes the expense deductible, right? But of course, getting carried away can be very easy because, again, you have a good CPA in your team, we can make almost anything deductible ethically and legally, right? If we turn it into a proper business expense.
Yes.
However, you don't want to get too crazy with deducting if you know that you need your AGI. So AGI is your adjusted gross income.
I know that. I knew that.
Yes, your adjusted gross income. That is your magical tax number. That number is tagged if you're applying for almost anything. They're asking for your AGI. If you OD on deductions, your AGI is going to be a reflection of ODing on deductions.
Right.
That can now hinder you, again, if your goal is to purchase a home, purchase a vehicle, whatever it may be. If your AGI is affected, you're now impacted. So though it sounds good in theory, hey, let me deduct everything and not pay no taxes, well, now you are limiting what you can do in at least the next 1 or 2 years to better propel you to finish your wealth building journey. So why delay if we don't have to, right? You want to be comfortable with the amount you pay. So again, this is what tax planning is for. Because outside of us projecting out your revenue and expenses to figure out how much you'll pay, we're asking, okay, well, what are your goals, right? Are we trying to get a house? Are we trying to start another business? Are we about to get married and have kids? I need to know what we are saving for, because this will dictate, how much we are, attributing on our tax return. Because not to say that we don't report income or we don't report expenses if we don't need it to be higher or lower. It's we can figure out a strategy to work around it. So whether it's deferring revenues, whether it's expediting expenses, we can strategize around it, but it's all up to what your goals are.
Ooh-wee. Ladies and gentlemen, it's the People CPA. I don't keep saying that. It's the People CPA.